As we jump into the market, we need to talk about what's happening specifically on the S&P 500 and the Nasdaq 100. We can talk about yesterday specifically when you came down early in the day, touched a key range and bounced right back into supply. We can see that we were rejecting once and twice off of this level. I'm going to tell you exactly how I'm trading it. Also, yesterday, I told you what exactly I was trading, as always, like I do here on the channel. And I showed you my position as well. I told about the SPY puts and the Oxy calls on oil. I'm going to go into exactly how I see the market moving, trades I'm loving, and everything in between. Before we go any further, I have to ask you to consider doing two things: liking and subscribing. I'm posting videos every single day for you, the viewers, so you are prepared and you know what to expect going into the market, and you're not taken by shock whatsoever by big ups and down swings on the market. Trying to keep you posted every single day. So let's get into the video. What we're going to be looking at here, again, is the Nasdaq and S&P. So what happened here going into yesterday? I'm going to bring up the opens indicator so I can break down the days more clearly. And you can see, right, coming in here, yesterday, we still had that push back up near the end of the day. You got rejected. You came back up today around 8 o'clock and boom, shot back down. What did I do? What did I start taking? Now, looking at the market, I'm going to show you what I was looking at. We have Discord. The Discord link is down below if you are interested. But I started taking more meta positions, Facebook towards that downside, all right? I also had Oxy for the upside. I took those a little bit early, and then I had some SPY puts as well. I keep trading the same SPYs for November 18th. But I want to highlight, I trim those profits every single time. When you come back into supply, I add more to my puts, specifically on SPY, because those have date on them. I've gone over the importance of having time on those positions, specifically in this market. But let's break down a little bit further. So what happened here? As we really get in here, let me fix that real quick. As we get in here, let's look about the broad picture of what's really happening, right? So we've seen we were making lower lows, lower highs, and eventually you made a new low, and then you got a big bounce here. Now, we're going to go into a little bit about what happened in this bounce, what's happening now, and how I expect us to move forward. But basically what happened here is you had a quote-unquote expectation of a Fed pivot, and you started bouncing on this news. You came back to a key supply, and you could not get above that area. It's important to mention you did bounce above 11.57. So from here as well, let's just go out a little bit more and see what's happening. As we go into ES, where are you hitting here? You're bouncing below, and you're coming to that level of May lows, right? We come all the way back. You can see back here, this is your May low, and you can see you are rejecting off of this level on these higher time frames, right? So it's very important to realize where price is getting rejected, how you're moving going forward, and kind of how the overall aspect of the market is moving now. As we're looking here as well, you can see we're actually pushing down further. What I want to highlight here though, okay, so as we really get in here, right, what I was highlighting back here is kind of playing out right now. We go to the 4-hour chart. Let's talk about what's happening here, right? So the two areas I was talking about, I mentioned this area right here on September 5th, and I talked about the area right here at around October 3rd or 4th, basically through now, right? I'm talking about how the volume's been deteriorating, how it's been slowing down. As we come into the chart, we can also see this, right? So I just go to the Yahoo because it's really easy for you guys to see, and you can do this really quickly on your phones or whatever you're using to trade. And as you come in here, you can see volume's been declining. You had a really big spike on the after hours right here, but before this, I covered that as well. You were sitting below 80 mil roughly. But again, I will highlight this was one of the uptrend days, but we can see that you are declining from the very bearish days that we had, from basically 108 all the way to 153. Ending on September 30th, right? So ending September 30th is when you kind of start finding your bottom right here. But we can see all this downside had increased volume, and then going up, it is less volume. What does that tell us? If you are retracing towards that upside with decreased volume, you expect continuation towards said area with increased volume, which the increased volume was towards the downside. You're getting that back above supply. So these are all reasons to be concerned looking at the market right now based on what's happening, okay? And again, I try to really keep you guys posted with what I'm trading and my overall aspect on the market. Right now, I'm not trading short dated positions like a weekly or even 2 weeks out. The shortest time I'm going for is October 21st, but I think the safest and best positions are gearing up for November 18th. And again, this comes back into cheddar flow with looking where big money's going. As we look at Qs and SPY, you can see a lot of these big orders now are shifting from October 21st into December, right here, 12/16, and then as well going into November 18th. So these are going to be your big days right now, specifically on the indexes, right? I mean, look how beautiful this is. So much downside coming in for a time as well, projecting more downside on the market. And a lot of these are block orders, which in my opinion tell you these are big funds going into these positions. They may not be as aggressive as sweeps, but they're still telling you big money is expecting more downside. Now, looking at this, what am I looking at? Now, as we've been here as well, I've been talking a lot about VIX, and I've been telling you, why are you pumping up on the market, but VIX is holding 28, 29. Today, you get back above 30 and you kind of mount that area as well, queuing up in my opinion, and it looks like it's getting some sort of bull flag here as well, as you can see, right? So as we look at that, and again, I don't like to chart VIX as like a stock or an equity. I like to look at it based on ranges. As you get above X level, it tends to push you more bearishly. So sitting above 24, we always expect a bounce. Sitting above 28 to 30, you expect more upside to 35. We have not been able to reclaim above 35, 36 in a long time. If you get above that area, it'd be the first time on the year that you could hold above that, which would signify some massive downside on the market. As well, DXY, we've seen a lot of retracing overall in the past few days and kind of 2 weeks, right? Well, spoiler alert, over the past 2 days, you've reclaimed almost half of that move towards the downside. So 1, 2, 3, 4, 5 days to the downside, 1, 2, basically 1.5 days to the upside, you're already reclaiming most of that move, which tells you, like I was saying, China is pushing the market down, trying to devalue the US currency, specifically what they're doing with the US dollar, the yuan, and what they're doing with gold, specifically precious metals. They've been talking about that quite a bit to try to get their currency worth more. This is a lot of pain in the market and causing this downside here, specifically on DXY, which again lines right back up with how Nasdaq has been moving. But I do want to highlight as well, there's some things that you need to be expecting and prepared for going into tomorrow. As we look at the calendar, tomorrow morning, you're going to have a few things. Payrolls being established and the unemployment change as well for September. These are big factors. We need to start seeing unemployment start to rise from the Fed's perspective. Okay, but either way, I don't really see these coming out in a bullish sense for the market personally. Even if you beat, I think it's overall bad news for the market. And if you miss, it's still kind of short-term bad news for the market either way, right? So I don't really want to make too much of a comment here, but I would be watching out for these overall. So I did tell people in Discord as well, I'd be considering cutting some of the positions going into tomorrow just based on how these are moving right now. That's for myself personally. Everyone else should always be doing their own DD, even in Discord. Use us as an indicator, but ultimately you are in charge of your own decisions and what you are trading, right? So that's what we're looking at there. So as we look into the day, you're kind of ending at this range as well. And again, it comes right back down to some previous lows that you made and previous highs. Again, coming back to these key levels, as you can see here on the 4-hour chart, you start getting below this. And in my opinion, if you go below and mount below this level, so bounce, retest, go down, I expect a clear break towards the downside of establishing some more of those lows as well. That's my opinion, how I'm looking at the market. And I'm trying to play it a little bit more safe lately, but overall, this is my viewpoint of how we're moving right now and kind of what I expect. Now, I haven't been talking too much about equities specifically, like Apple, Tesla, Meta, some of these other trades I like, right? I've been talking a lot about oil. And as we look at oil, you are getting back to key levels. What am I talking about, right? So these are 2021 highs. Yesterday, I told you I was in the Oxy position, right? I'm going to come back to this chart. This looks like a bear trap. People are always telling me, what's a bear trap? What's a bear trap? What's a bear trap? Ultimately, it's when you break through a significant level and then quickly come back through it. This looks like a bear trap on oil, specifically what Biden and the overall U.S. government is doing with our strategic reserves on petroleum. And we now know that they are running low on those and that they can't continue to do this, specifically with that OPEC meeting. So what did we do? We longed Oxy. We longed Exxon. What happened on Oxy in the past 2 days? Congratulations. Since we've been talking about it, you went from 63 all the way up to 70.5 right now. You hit other highs as well. What about Exxon? When I was talking about this, you were down here at 95. You already are at 102, very close to local highs as well. This is what's happening. This is what's taking place. As oil mounts 89, in my opinion, you come into territory of full bull. For example, when you've got it to this level previously, look how you reacted. Immediately slingshotting towards the upside. Am I saying tomorrow you're going to slingshot up? No. But I'm telling you, as you start to mount this key area once again, your previous 2021 highs, I anticipate bulls to take full control. That's why all these hedge funds are pricing in oil going up to 120 a barrel again. That's what they're saying. Exxon is undervalued still. Oxy, undervalued. That's why Buffett keeps buying more and more and more. And I anticipate news to come out very soon that Buffett bought more Oxy, which will drive the price up even further. And that'll be kind of an exit mixed signal for myself personally. Looking at that, I still need to establish a long-term position in some of these. I'm not in a long-term position. I was trading more short-term for October 21st, but now is the time for me, as we mount above 89, to start looking and getting prepared for a long-term outlook, because oil's going nowhere and the demand's just going to continue to rise. Looking at equities as well, obviously I'm expecting downside on the market. So what am I looking for here? I want to get into the big six for a second, right? We talked about the big six: Apple, Microsoft, Nvidia, Google, Amazon, Tesla, right? This is a good viewpoint. You've already tested lows, and in my opinion, you look weak where you're at and you want to come back down further. A heavy reason looking at this too, why you're kind of still holding down at these levels, is because Tesla is in so much pain. So I do want to highlight that as well. But Tesla, you still have room to come back down to 208 to those lows, which I think will be established once again. Obviously, favorite play, I mentioned this on Twitter as well. We're going to go to about the 15-minute time frame, and I'm going to show you this chart as well when you jump in here. So look what's happening. You are rejecting once, twice, 3, 4, 5 times at this level 141.5. If you didn't get the alert, it's because you're not following me on Twitter. I post this for Discord, but I also love to post free plays. I love to just post things for you to keep you guys updated on the market, right? It's not just about making you guys pay me so you can follow me to my magical trades, right? Really, the Discord's for education and getting you towards that next step and showing you how I trade, but I love to post these as well. Looking at Meta, I told everyone, looking absolutely bearish here, 40.94. Or are you sitting at the end of the day? You basically dropped almost $2 here. Looking at Meta, right? Look at how you're dropping back down here, from there all the way back down. And you actually had another retest of that area to get another entry as well. Looking at Google, you're starting to have a lot of ascending wedges starting to form across the board, and you're kind of breaking out of them right now. So you can actually see this as well, right? I'm just doing these really quick so you can see. It's looking like these want to start reversing, and look where they're coming up to. Back to some of these key areas. Now, Meta came back to the really big level, so that's worth mentioning as well. Another trade that was mentioned was JREAM as well. So a lot of us are looking for longer term contracts to have safety and ultimately to make as much money as possible. Nvidia 1118. Again, we love November right now. November is what I love to trade. Look at this. You came up, you guys started shorting at the highs up here at the retest of 134.5. And look at how you're breaking down now. You already get your first test of this previous supply or demand level here. And now you're testing and pushing back down. I can see it's coming all the way down to 126, possibly even reestablishing those lows once again. So I'm telling you, be prepared on this market, because there's a lot to be looking at and a lot to be talking about. So you need to be prepared with how we're moving, because a lot of these are happening fast and quick. Amazon, also still love this play, guys. You're still holding on to that demand level here, but look at how we bring this back. Look at how you're just making lower highs all day long, right? Even with the bullish behavior on Nasdaq. Nasdaq pushed right back up to highs, but guess what happened? Amazon didn't, which is showing weakness on the market, in my opinion. So I'm looking at all these with weakness, and I'm really watching to see how we react to this news as well, right? So ultimately, what am I doing? I'm sitting and I'm being a little bit patient. I do have some puts on the market prepared. I have a little bit of time as well to protect myself overall, but ultimately we want to see a break, a retest of 11.35, and ultimately getting below this level. I believe if you can get below this level, retest, in my opinion, you will make new lows once again. And I think the market ultimately will be in trouble at that point. I do not believe we're at a pivot point. I don't believe anything of that sort, right? What I want to do really quick before I let you guys out of here as well is look at yields, because yields tell the story of the strength of the market. Once again, yields are inverting. Look, the 10-year is getting back over the 30-year. I don't care about the 2. I don't care about the 4. Those consistently look terrible, okay? Because we're in a bear market, right? So as we look at the inversion of really what's happening here on a long-term sense of the stability of our economy, look at what's happening here. Yesterday, you had that push down, but guess what? You bounced at 98, barely even under the full inversion, and now you're pushing right back up. This is what we want to see. These are the big indicators that really set us up, and that kind of set us up prior with a lot of those puts as well, going back to this time right here. So as we look at this, in my opinion, lining up with DXY as well, it's queuing back up for another move back towards those highs, which have to have you concerned right now, specifically with what's happening with energy. We know OPEC just did the major cut, and this will affect the U.S. economy and the coming CPI reports. Maybe not the next CPI, but the one after that will greatly be affected by energy prices skyrocketing very quickly. So over the next 3 weeks, watch your gas pumps, watch what's happening with energy, watch costs start to rise once again across the board, even though they already are rising on most everything else, but this will influence the rise even further. And in no way am I wishing people pain or hardships on the economy, but I have to prepare people for what's really going on out there. And that's what I will do. These are what I'm looking at. These are my trades. That's what I'm looking at overall. Last thing I'll cover is SPY. Again, look at how you're performing here. You're pushing right back down, almost engulfing this whole candle you made yesterday, trying to push back down to these lows once again. Across the board, we're seeing bearish behavior, bearish behavior, bearish behavior. We're seeing a push almost to these upside and then immediate rejection, no follow through. Again, last thing right here, bookmap, what's happening here? CVD all day in the red. We actually saw some decent buying, but looking at the end of the day, a lot of selling pressure coming in. A little bit back and forth. I believe this is probably a lot of hedging happening. But remember, the past 3 to 4 days, how much shorting have we seen? It's been ridiculous. Okay, if you go back and watch those videos, look at how the overall hidden orders, the dark pool's been showing up. It's been all in favor to the downside, and I think we're now seeing maybe the last leg of this start to accumulate. So I recommend tomorrow, be a little bit cautious, be a little bit careful with how news comes out, but ultimately, I do believe we are gearing towards more downside. I think this was just somewhat of a bounce coming back into supply, getting ready for more downside like we have seen here in the past, basically since our high we made on April, I believe, 16th, right? We've had a bounce, bounce, another bounce, and it looks like it's just getting ready for more potential downside. I'll see you tomorrow.